Hi, good morning. This is Raman, and what we are looking at doing is obviously for today's session, which is session 4, for the unit 7.3 strategic resource management. We're looking at covering the learning outcome 4 today, which is to understand the role of marketing in supporting the business strategy. So on my screen, you'll be able to see that I've got 2 documents open. One, which is the unit specification spec, and we're just going to cross-reference and obviously refer that again. So I've just kept that document on screen. And then on the other side, I have a presentation which I will be emailing to you as well, and it will also be available later on Moodle for you to be able to access, with regards to what has been delivered, with the role of with regards to the learning outcome 4, the role of marketing in supporting business strategy. Now, first of all, what we're going to do is obviously start off with, understanding, the basics of, what is the role of marketing, and what do you understand by the role of marketing. I think it is quite evident, and we've come across this quite often, that marketing is perhaps one of the most important activities that a business does or carries out, because it has a direct bearing on the profitability, the sales, and overall the survival of the business. Larger businesses typically dedicate a lot of staff and resources, in particular to the purpose of marketing, because it is really important in the case of consumer organizations that they are seen by their consumers in as many locations, places, and as many opportunities as possible. And this then allows them to build a top of the mind recall and word of mouth, which then leads to sales and progressively leads to increase in business. It is also important to realize that marketing cannot be carried out in isolation from the rest of the business. So once we are studying this particular learning outcome, what we are looking at doing is we are going to try and study and look at the role of marketing in the overall strategy of resources. In particular, how does marketing activities typically help out in supporting the overall business strategy for an organization. The other bit that we will also look at is one of the key things related, that we need to study with regards to this learning outcome is to understand, how do we do external and internal environmental analysis. We also want to be able to look at, the various tools that we've covered in the past, things like PEST, SWOT, value chain, Porter's 5 model. All these analysis or tools and techniques are essentially used to carry out analysis, with regards to, the role of marketing and obviously marketing strategies. This is something that we will also look at, and I have a separate presentation which I'm going to probably just show you, but I'm not going to go through in a bit more detail, is because that is something, what I'll do is I'll forward it on the email so that you're able to have it with you, from a point of view of understanding. But this is something which we have covered in the past in terms of the various tools which are used predominantly for external analysis and internal analysis. And then towards the end, what we are going to be looking at covering is how do we look at evaluating marketing from a point of view of its performance, the budget which is spent, the resources which are allocated. We need to be able to calculate the return on investment and carry out appraisals to map performance versus objectives. Has that marketing campaign really been effective? Has that campaign been effective enough to be able to have a return on investment? Has it achieved its objectives? And overall, what we will be looking at is how the performance metrics are then utilized within the role of marketing to kind of evaluate whether the activities done under that particular umbrella of marketing have been successful or not. So very briefly, let's start with this particular few slides that I have at this moment, which I'm going to obviously take you through. and this will then look at covering this particular learning outcome, which is learning outcome 4. So as all of you are able to see my screen, what I'm going to do is just go through some of the slides, and if you have any questions and queries, then I will suggest that if you type that out in the chat to me, and I will take them up as they come along. Now, the first one, let's understand very briefly, what is marketing. Now, I've just explained that marketing is obviously a task which is, very vital for business survival. A lot of companies use this, use these set of activities to basically propagate their business, generate sales, create customers, and, arguably and uniquely look at identifying and meeting the needs of customers profitably. Now, if you're able to get the product right at the right place and at the right time, then you are able to persuade your customers to be able to buy these products and services from you, which is basically evidently an end result of the marketing activity, and it leads to the creation of sales and generation of profits for the company. Now, this is just a recap, because I don't think we are looking at marketing management as a topic, but just a recap on this slide in terms of what are the various functions which are involved under marketing management. So there are things like marketing research. You look at product design, product engineering, which is the creation of products and services. You look at pricing, advertising, distribution, customer services, packaging, and a whole host of other functions which are also covered under the overall function of marketing management. Now, let's look at very briefly understanding what is market size. Now, the total level of sales of all producers within a market would kind of constitute the market size. This will also mean that sales, demand and supply, when we look at what and how much is the demand for a particular product or services in the market. So, for example, when you look at the cell phone market today, and when we look at the smartphone market, it is clearly differentiated in terms of the number of units which are sold across the year, combined together by all the manufacturers, and that kind of constitutes something called the market size. And in terms of sales, so we can also divide it, kind of in terms of volume of sales, which is nothing but equivalent to the unit numbers or the number of phones sold across the year. To the best of my knowledge, I think the smartphone market is estimated to be 1.3 billion phones this year, and that is in terms of volume or unit sales. And when I can also define the size of the market in terms of value, which is the total revenue the sale of these products generate, would be constituting something called a market size, but in terms of value of sales. So an average smartphone costs about $600. So if I multiply $600 by 1.3 billion units which are going to be sold, we can calculate the total revenue generated, which basically gives us the market size. Now, next slide, what I want to look at is briefly is market growth. Now, market growth is nothing but a percentage change in the total size of the market, either in value or unit terms over a period of time. So when we compare, sticking to the same example of the cell phone market or the smartphone market, and when we compare that to the sales or in terms of either volume or units or value as compared to 2017 versus 2016, gives us the percentage growth which the market has seen. So smartphone market on an average is growing at a rate of 4 to 5% in developed countries, in excess of 30% in the emerging markets or developing countries, and in the underdeveloped countries it is growing in leaps and bounds. It varies between 30 to 40%. So growing markets can growth markets or growing markets can have many competitors. As you can see, Apple came out with a smartphone. At that point in time, Nokia was a clear market leader. In 2007, BlackBerry was a market leader in the corporate market, but with the growth of smartphones in the market and the smartphone market in particular, we've seen a lot of competitors which have come out, and they've started to offer kind of equivalent products or better products than iPhone or Samsung Galaxy, and that is what has kind of grown the market overall, and that is why, as compared to 300 million phones which were sold in terms of smartphones in 2007-8, the market has become 1.3 billion currently in 2016-17. Now, the growth of the market is actually affected by a lot of internal and external factors. Some of the factors which affect directly the growth in the market could be factors which are external factors, which could be competitors, for example, pricing, economic situation. We look at technology innovation. So if there is a new form factor, new product size, or a new technology coming out, it affects the growth in the market. And sometimes when we look at slowness or the growth not keeping up with the pace in terms of growth falling, then in that case, that could be because the market is saturated. That means if you look at United States versus China, when we compare the growth of smartphones in these markets, both the markets are showing growth, but because there is a finite set of consumers in the United States, when we look at US in particular, 330 million in terms of sales, and when we look at China, 1.3 billion in terms of population, there's a lot of population which does not own a smartphone. So there the rate of growth is higher than as compared to US, because US is considered to be a saturated market. Now, there is a simple formula we look at, which is to basically compare market share, and that is the percentage of sales in the total market sold by one business. So market share is equal to the firm's sales. So for example, if you have to calculate the market share of Apple in terms of smartphone market, so what we will do is the total sales that the iPhone generates across the year divided by the total size of the smartphone market multiplied by 100 will actually give us the market share for Apple. And brand leaders is a term which is coined, which basically defines the company which has the largest or the highest market share of that particular model or product within the market. So the smartphone leader as of now in terms of the smartphone market is Samsung, and it has its range of products, which Galaxy phone, S6, S7, S8, which combined with the iPhone, is faster and better selling, and that's why it has the highest market share. Now, looking at some of the marketing strategies, a lot of companies employ different marketing strategies. So there are companies which are consumer organizations. There are companies which are, business-to-business organizations. That means they predominantly sell to businesses. So we can classify them as consumer markets and industrial markets. And then again, the marketing activities and the role of marketing differs in terms of the overall strategy within the organization, because some of them are going to consumer, directly to consumer, and some of them are basically making products which are being sold to businesses. So those are briefly defined in slide 9 and 10, marketing to business and marketing to consumers. In terms of market orientation, there are these two types that we look at in particular, which is market and product orientation. So an outward-looking approach, wherein the product decisions are based on consumer demand, is basically nothing but market orientation. But when we look at an inward-looking approach, wherein the company is more focused on making products which are created keeping in mind consumer demand and consumer preferences, but they are created from a point of view of being innovative and market ahead of its time, and the company focuses on something which is creation of the product first and then trying to sell them later in the market, is something but a product orientation approach. So a market orientation approach primarily would look at, let's look at product orientation approach would primarily look at an example of a company like Apple, wherein they create products which are ahead of time. They look at doing a lot of research. They create the products first, and then because the product is very new and innovative in the market, this then goes out and obviously looks at, creating the sales of the product afterwards once the product has been launched. Market orientation would be that, obviously the company is looking at studying a lot of research data, consumer data, and what they are looking at doing now then is to align their objectives to create products which align with the demands of consumers in the market. And these are where we could pick up examples of, things like consumer products like Coca-Cola, for example, which has different flavors or variants of its cold drink, soft drink. And this then is market-oriented approach. So here, a market-oriented approach requires a lot of market research, because they are basically based on the fact that the company need to produce products which are less likely to fail. That means they are more based on customer and consumer preferences, and there is, the product lifespan is likely to be longer, because they always see continuous feedback from consumers to be able to keep refreshing the product. So as we've seen over the years, Coca-Cola has remained a product. It's a preferred soft drink. It's the world's largest soft drink maker. And over the years, it has created various variants of the product, depending on the research and the feedback which they've received from consumers. A product-oriented approach or a strategy essentially would be that businesses look at inventing products which they believe are going to be useful and successful with consumers, and they are predominantly seen in the pharmaceutical and electronic sector. A very good example of that will be medicines, because pharmaceutical companies invest a lot of money, time and effort into research and the creation of drugs, and also electronic companies which obviously look at creation of categories like tablet, smartphones. They were products which were not in existence, and the companies which looked at doing product-oriented research and then created these products were looking at creating a new market and eventually hoping that these will create traction and the consumers will like the products. So high quality products which the consumers value, in most cases they are generally very high priced. They start off with being niche products, and then over a point in time, some of these products, depending on the overall business strategy of how companies employ marketing and obviously look at overall strategic objectives, they can also become mass marketing products. I'm going to skip some of these slides. These are further definitions which are key to understanding the role of marketing. So I'm just recapped some of these using a few slides between slide 14 to 16, and they talk about various marketing approach. So which is something which is what you can look at how marketing is done, and sometimes it is asset led, sometimes it is social, and in some cases it leads to a creation of a coordinated marketing plan which is then implemented as a strategy to fulfill objectives. The other bit that we will look at will be another presentation which I've got which basically covers some tools and techniques that we have to understand as far as the internal and external analysis of the market environment is concerned. So just briefly look at this again, quite a detailed presentation, but I'm going to kind of run through a few slides here to try and refresh some of the things that we've covered in the past. So along with that, what I also have is a good handout which I'm going to send across to you a bit later, along with the presentation, would be to give you some reading into the what and how of marketing performance and how it is managed when it comes to the role of marketing in supporting the overall business strategy. Now, when we look at identifying the factors which affect the marketing strategy, or the strategy which affects the factors which affect the business and its overall strategy, we look at categorizing them into internal and external. And there are various tools and frameworks which are available, which are used to kind of look at analyzing the factors which affect which become basically the factors which are classified as internal and external factors. So here what we are looking at is some frameworks to be able to understand these factors which affect the strategy of the company and the role of marketing within the company, and they'll be classed as internal and external. So the internal, let's look at the internal ones first, which means that they are factors which kind of are internal to the company. That means by studying the internal environment of the firm or the organization, we can clearly identify what are the what are these factors, how they affect the business, how they affect the strategy, the aim, the objectives, the overall goal, and also how they are then tackled to to kind of address the overall goal of the organization. Now, some of the internal factors that we look at, are basically conditions which affect decision making by the management, and they are related to obviously resources, capabilities, and core competencies of an organization. Again, I'll try to draw your attention towards that we are studying this from a context of strategic resource management, which is the the unit. And in this, what we are looking at is marketing as one of the resource, or people as one of the resource, and the capabilities which people have as one of the resources which are used to manage strategy and overall strategy within the organization. So conditions which affect decision making, particularly for managerial decision making, comes across from uncertainty, Uncertainty would be classed as, something which is which comes into play because of competitors' action. It comes into play because the customer preferences change over a period of time, or they might change drastically. So those are factors which create uncertainty. We look at complexity. Complexity would typically be classed as, causes or issues which are related to the internal workings of the organization, and they then will be looked at in a bit more detail in the subsequent slides. And then we also look at intra. Intra means within the company, intra-organizational conflicts, which could happen when different people or different managers are trying to make decisions and how they affect their individual departments. So what we have to do is here, within this particular learning outcome, we have to choose, the right tools to be able to do internal and external analysis. So what we are going to look at is that when you look at some of the commonly used techniques for internal analysis, if you are looking at single business, could be resource audit, could be analysis of the cost and profit. We look at some of the frameworks like value chain analysis, supply chain analysis. We look at for multiple businesses, if it's a business which it's a company which has multiple businesses and products. That means if you look at a business like IKEA, which is predominantly into furniture, but within that they have a lot of products and services. But when you look at a business like Tesco, they have multiple businesses because Tesco as an organization has, retail stores, they have bank, they have insurance, they have mobile phone. So they have multiple businesses. So there are certain other frameworks within that to be able to analyze their portfolio. And then in some cases, what we look at is we look at both the frameworks to be able to identify core competencies of the business. What is the core of the business at Tesco? The core of the business at Tesco is that it's a grocery, it's a retailer, it's a high street retailer which predominantly started off as a grocery retailer, but over the years they've expanded and diversified and have started to offer a lot of other products. And how do these frameworks then help us in doing the shareholder value analysis in order to see how these companies then address the requirements of their shareholders in terms of growth objectives, in terms of strategic objectives, in terms of profit objectives and things like that. Now, some of these subsequent slides then talk about various audits which can be done, and what we will be focusing on would be later stage, switching back to the other presentation, would be to look at the marketing analysis in particular, so that because we are studying it in the context of the learning outcome 4, which is role of marketing in supporting business strategy, what we need to be able to do is understand some of these internal and external environmental analysis tools, but in the context of marketing as a function. So here we are looking at tools like customer analysis, selling products and services, product and planning, pricing and distribution, research and opportunity analysis. And some of these then are defined, in the subsequent slides. So for example, when we look at benchmarking, for example, when we look at one product versus the other product, like-for-like comparisons, then in those cases, the objective of doing the comparisons is to find out the pros and cons of the product and services with regards to its competition, and in some cases, develop, USPs or the unique selling propositions as compared to the competitor's product to be able to gain more market share or, gain growth in the market. And then this also, there are other analysis tools that we look at, which is value chain analysis. And this basically talks about, how a product creates value, for the customer, and, what is the value in terms of price the customer can attribute towards the benefits it provides once the product is bought. And the difference between the value to the consumer and the cost of production basically gives the profit margin to the company. So the concept of value creation basically, floats around the VPC, which is value to consumer, the price to consumer, and obviously the profit margin or the cost of production. Between the difference between the V and the P gives the cost of production, which is leading to then the calculation of profit margin for the company. So I'm going to send these slides over to you, and obviously these are a few things that we will be able to look at, or you should go through in a bit more detail, which will help in obviously looking at critically understanding, the internal and external environmental analysis tools which the companies use, and the types of frameworks the companies can use in terms of understanding the role of marketing within the overall supporting aspect of supporting the business strategy. I'm going to obviously just switch over to the previous presentation that we had, and here I'm going to be looking at some of the tools and techniques which are then used to understand how the evaluation of marketing performance happens vis-a-vis the objectives which are set. So designing marketing metrics is one of the key functions and roles of marketing, and what we look at is the performance management processes. They differ at different at the organizational level. So it consists of 5 different steps. Before you can measure performance, you have to look at setting a standard. So if I have to understand that you're looking at doing 100 meters in terms of sprint, we need to be able to benchmark how fast or how slow you need to go, because we have already a preset time. Say Usain Bolt, for example, he's run 100 meters and he set a world record. So when you try and benchmark your performance, when you run a 100-meter sprint, try and benchmark it against the set standards of what have been set in terms of the international platform. So setting performance standards. Then you look at taking feedback. You look at also this feedback obtained through various types of data. It could be surveys, questionnaires, face-to-face interaction, focus group interviews. And once you've collected that data, you look at evaluating it. And then once the evaluation has happened, what you look at is coming out with recommendations or conclusions, which is in the form of a corrective action plan, CAP, corrective action plan, CAP, CAP, which then helps you to kind of try and achieve the performance which then matches with the standards which or the standard which has been set in terms of the matrix. Now looking at each of these with 1 or 2 points is, how do companies or organizations set the performance standards? Now performance standards are derived largely from objectives and strategies set forth at the strategic business unit SBU level and the individual product market entry level. So imagine, so let's take an example here of, a brand of Unilever, for example. Unilever is looking at introducing, say a new product in the market, which is butter, for example. And when they are looking at introducing a product like butter, they will have to look at the other variants which are available in the market, who are their main competitors. And once they're able to achieve and understand that, what they will do is they will try and create a benchmark or a standard against which they will need to, kind of benchmark their launch of that product. So, for example, if they introduce something like Flora, which is currently already available in the market, then they need to be able to produce and then introduce a product which then kind of meets the benchmarks and the the standards set by Flora, in the market. So performance-based measures are often tied to the compensation of individuals, because as you understand in sales and marketing, what tends to happen is that most people will carry some sort of targets, and these targets, if they are achieved, then it leads to companies and organizations reward their employees via with the means of bonus and incentives. So if you're able to achieve the specified goals which are set according to the standard of performance, then it leads to certain incentives or compensations to individuals who are able to meet those goals set by the organization. Most of the goals which are set within the organizations follow a system called the balanced scorecard, and we will discuss this in a bit more detail in the subsequent slide. Most targets today which are set using the SMART target acronym, which stands for specific, measurable, attainable, relevant, and time bound. Nobody likes to take up a target or accept a target which is non-achievable. So most organizations set marketing targets which are under the context of SMART as an acronym. We look at profitability analysis. Now here there are individuals within the organization or resources which are benchmarked against profitability analysis. That means how much of profit a product or a service is able to create in terms of its sale, how much demand generates, how many customers does it have, and obviously what different markets it can be sold into. There are some limitations in some cases, and when you introduce new products, companies do not kind of set standards to benchmark against profitability, because they are looking at largely setting the product up in the market, or help establishing it in the market. In some cases, profits are also looked at as a short-term measure, because when you look at calculation of sales vis-a-vis if it's a niche product or a smaller market, and then in that case, this can be misleading. And last but not the least, in some cases, products, profits can also be affected by factors beyond their control. That means currency fluctuations when you look at, for example, exchange rates when you look at. So exports today are much more favorable in the UK because the pound is falling as compared to the euro. But if the pound becomes strong, then imports become cheaper and exports become expensive. So there are these external factors which kind of affect, the profitability analysis. There are other metrics that you can look at. There's things like full costing method, shift to activity-based costing. There are measures which are related to customer satisfaction, and you will find this in the case wherein companies and products which are companies which sell products which are intangible or related in general to services. There the ratio of the focus and this the kind of impetus on customer satisfaction is the highest. And in those cases, what you will look at is the performance metrics or the marketing metrics are defined primarily on the criteria of measuring the customer satisfaction index and how the firm is able to establish a long-lasting relationship with them. You can see that in the case of banking, for example. Customers do not change their bank frequently, but if then the organization gets into understanding why and what are the reasons why the customers have changed banking or switched over banking, because companies would like to acquire customers and not lose customers. And this is then closely related to the concept of CRM, which is customer relationship management, and a lot of companies employ softwares like Salesforce in order to be able to manage customers' data, and also to have key metrics in place to understand and get feedback from these metrics. Now, we also look at other things like the corrective action and evaluating data, and obviously gathering data. And this is something which is put into place by organizations when they feel that the marketing strategy, the goals and objectives which were defined, did not end up achieving the goals which were set out and for which the marketing and the budget and the resources were spent. And in those cases, the analysis to understand what went wrong, how it and how and why it did not achieve the objectives is basically studied using taking feedback and looking at gathering data, and then that is put together into something called the corrective action plan. Now we also look at certain things which I'm going to be looking at is that when you look at the activities in terms of marketing, what we tend to do is we tend to then also understand how do we what are the key, say for example, the the techniques to basically look at monitoring these activities. And this then can be looked at from an angle of if I just bring this up, give me 1 second. So what we are looking at here is understanding how some of these activities then contribute towards monitoring, and also contribute towards streamlining and making the operations of the organization much more effective. So when we look at the role of marketing operations in particular, we are looking at once the activity has been rolled out, we are looking at tracking and monitoring. We are looking at readjustment of the strategy to try and see if we feel that this is not going right or in line with how it is required to be done. Then in those cases, what we typically look at, we also look at the reassessment or readjustment. Let's put it this way, of the strategy. And in some cases, what we look at in particular is that we look at defining, for example, we look at probably, say for example, defining and changing the advertising strategy We look at changing the the strategy, which is to look at distribution. Say, for example, if we feel that the product is not selling well and is not gaining traction, say, for example, you look at a company which comes out with a few sets of products specifically oriented at a particular market, and if they feel that the product is not selling well, it's not being accepted, then there could be various reasons that they look at, and that is where the strategy is reassessed, is to see if the product is easily available in enough number of counters across the stores. Is the product visible? Has the company put in adequate resources to look at advertising so that the product is actually, the customers are actually aware of the product and the offerings? And in those cases, what we look at is, we look at predominantly understanding, the role of how the strategy can be reassessed in order to be making that product, successful. Sometimes you also look at, reassessing the strategy, which is to look at sales information, and you look at reassessing from management point of view. We look at, the sales information from a point of view of, functional managers and marketing managers. Now, an example here would be that if you work within, say, Tesco as an organization, the top management would like to see data which is coming out of sales and coming out of marketing promotions from a different point of view. The top management would be interested in finding out using metrics, that whether this promotion or whether this advertising campaign during the Easter has resulted in this much increase in sales increase or revenue or not. The marketing managers would be looking at, predominantly the data coming out of that campaign, which has been done, to see if the campaign was successful, how many new customers were acquired, or what kind of new target segment the promotion was able to reach to, and did it increase sales in areas wherein they had low market share, for example, or low volumes in terms of sales. The functional managers would be more or less looking at the people who are directly related with products and product services. So here an example would be a product manager, and that person would be more interested in finding out if Tesco was concentrating on, say, promotions with regards to selling a lot of products during the Easter campaign, but one of the product managers, say, for example, for chocolates and confectionery, would be more interested in finding out if it was able to sell more because of the the marketing campaign and the advertising and this point of sale material and the extra opening hours during this Easter period promotion, whether they were able to sell more chocolates as compared to last year, or more chocolates in terms of volume sales as compared to their competitors. So the decision making and the type of information which is collected from marketing might be used by managers and people at different levels in a different way. So the top management is more interested in looking at the overall aspect of what was achieved and whether the set objective was achieved or not, in terms of increasing sales by 2% or increasing profitability by 4%. Functional managers would be more interested towards their own product categories, and marketing managers would be interested towards understanding the metrics, the data, the type of customers, where they had a good increase, or where they gain market share in terms of those categories. And then these are things which are subsequently explained in some of the slides in terms of how data is grouped and what type of data is identified and how it is analyzed by various different functional managers within the organization. Now, going further, what I'm going to be looking at is how do we look at certain things which are from a prospect of understanding in particular the measurement of marketing performance. So we understand that a lot of activities which are done within the organization at some stage affect the performance and the goal objectives in terms of goal achievements of the organization. So the sphere of marketing performance is very important, and here what we need to be able to do is we need to be able to understand what are the key fundamentals which are which kind of represent the overall process in how the performance of marketing strategy is evaluated within the organization. So in a broad sense, what we see is the performance, management in terms of marketing function can be done through studying some of the other processes or functions, such as things like planning, measuring, reporting, decision making, and also looking at research. And when we look at individual functions, we are able to understand and develop a deeper understanding in terms of how marketing performance management can be done. And it basically does just not includes, it's not just restricted to monitoring, but it is also looking at the assessment of marketing results. So if you have planned, managed, implemented, and so starting from create, implemented, managed, planned and managed a marketing campaign, how has it been, assessed, can only be done through this particular function of, marketing performance management. Now, some of the things that we look at as core concepts, within this particular field is something called KPI, or key, performance indicators. Now, key performance indicators, in general, when we look at from a point of view of marketing, are basically nothing but they are tools which can help you quantify a trend. They can, maybe help you understand a particular characteristic in a much more greater detail. And these, are basically identified in terms of 4 types of performance measures. One of them is something called the key result indicators, KRI, which basically reflect the performance related to a critical success factor. The others are called result indicators, performance indicators, and KPIs, as I said that before. Now, result indicators are nothing but which reflect what was done and what was achieved. That means they are predominantly focused on something called result. Performance indicators are which reflect what needs to be done. So sometimes you define a performance matrix is because you want this particular action or set of activities to actually achieve that, objective, and they are basically classified under performance indicators. KPIs are nothing but key performance indicators which basically indicate what needs to be done in order to increase performance dramatically. So sometimes organizations use the role of marketing and marketing strategy to be able to better their KPI or their key performance indicators when it comes to things. Key performance indicators could be you're looking at increasing market share. So you're looking at increasing market share from 3% to say 10%. It's a drastic measure wherein you're looking at drastically increasing the performance of certain categories or products to gain market share as compared to your competitor. Now, what Kotler has essentially defined, what is marketing matrix? So he's defined this as a set of performance measures that helps companies quantify, compare, interpret their marketing performance. And this is nothing but, classed as something called marketing matrix. And here, when we look at, these key terms, what we are looking at is how do we understand various terms within this marketing matrix to be able to better the output of the organization, to allow for better resource management, specifically the marketing strategy and the resource within the context of resource management within the organization. Now, there are certain other, let's put it this way, performance management or performance measurement techniques that are used within the organization, and these in particular sometimes are related to decisions or strategies. So when you look at, for example, tactical decisions, when you look at strategic decisions, when you look at decisions being made at at the top management level, can have an impact on customers, they can have an impact on market, they can have an impact on your financial details like return on investment, things like that. And to a certain extent, from a top management point of view, some of these decisions can also have an impact on the overall evaluation or the firm, evaluation of your value of the firm. So sometimes when we look at, the overall market strategy within the context of resource management, what we look at is we look at creating and doing something called a marketing audit. And this audit is primarily done in the context of understanding, what is going right, what is going wrong, what needs to change, and what are the things that the company needs to plan from a future perspective. So audits are nothing but in broader, they are broader in scope and they cover longer time in order to understand the sales and marketing trend or sales and profitability trends for an organization. Now, these audits can be done at the departmental level or the strategic business level. So in the case of Tesco, for example, that we took earlier, what we were discussing is that Tesco has various businesses. So each of the businesses could be considered a strategic business unit, like the mobile business, the grocery business, the insurance business, the banking business, and you could do an audit at the business level to try and see if the overall strategy which the company has and the marketing strategy which the company has put in place kind of aligns overall with the strategy of the organization or not. And this is where the audits come in helpful, because they help you to consider and do internal and external analysis, environmental analysis, and then hope they then are able to give you advice in terms of and give you analysis in terms of what things have to change with regards to ensuring that you are able to meet the objectives set by the management. Now, marketing audits, there are different types. You could look at doing an environmental audit, the objective and strategy audit, as can be seen in the slide. Some of them also look at a particular function in terms of audit. Say, for example, a particular product could be audited, and these then are done in most organizations in a routine manner, so that they are able to capture the basic essence of understanding how the strategy is working from a point of view of the overall marketing mix. Now, coming towards the end, what we are trying to understand in terms of the learning outcome 4 is primarily to understand the role of marketing within the overall context of strategic resource management, how marketing and its set of activities are measured and benchmarked, and for which we use the metrics which are defined. And there are different metrics that are defined to be able to measure the performance of marketing strategy. And towards the end, what we looked at was that we want to be able to understand and evaluate how the audit as a function helps you to evaluate systematically the various processes involved in the overall implementation of marketing strategy within the organization, and how it helps audit products, maybe helps audit markets, businesses, or strategic business units within the organization, is something that we have looked at in I would say a bit detail today using this particular slide or slides. Now, what I'm going to do is towards the end, I'm going to send you a bit of a handout which will cover and give you more knowledge on the learning outcome 4 in particular. There is this one particular handout that I'll be sending and obviously uploading on Moodle, which talks about how marketing management, how the performance of marketing management is evaluated, and what are metrics and things which are used as tools within the organization to do the work. And the other would be the presentation which I showed earlier, which was to do with the fact that we were looking at the internal and external environmental analysis and the various frameworks which are used to be able to do this particular to do this, basically to develop a larger understanding of how the role of marketing operation works within the organization, and what are the factors which affect those operations internally from internal perspective, and which operations affect them from an external perspective, and the tools and frameworks which are used by the organization to understand these factors which affect them internally or externally. And that kind of brings us towards the end of this particular session today, which is to understand the role of marketing in supporting the business strategy. As always, thanks very much for attending, and any questions and queries, please feel free to drop me an email, and I will come back to you with additional supporting documents. And in some cases, when we start the next session, we'll be able to pick them up and discuss them in a bit more detail. Thanks again for your time, and look out for the email which will come to you just after this, along with the link of the presentation and the recording for those of you who have not been able to attend today. Thanks very much again, and bye for now.